Welcome to Module 2. In this module, we will understand challenges that everyone faces while trading. First step to make profit is to save yourself from loss. So, if you want to make money from trading, we should be aware of some mistakes that we generally make while doing it. Most important thing in trading is to stay disciplined, whether it is short-term trading or long-term trading. Never open or close your position until you have confirmed signal. People generally get wrong feeling about the market while watching the current scenario and predicting the future. Rather, the correct approach in reality is to properly analyze the situation and understand what is going on. When you make such predictions, you should always have some solid reason behind that. Let's take an example. You want to trade a stock and its price is $5. In the next minute, it goes to $6, then $7, and next minute goes to $10. Now, would you like to buy this stock? Your answer will be probably yes. And why not? Because it is rising and you can make so much profit from it. The real problem in this situation is when you buy this stock at 15 and in the next minute it fall down to $12. In the next minute it fall down to $11, then $10 and then $9. What will you do in this situation? Majority of people will say that I didn't expect it that it will fall and I have suffered this loss to $6. Let me just close my position and save myself from more loss. Now there are two things to learn from this situation. First is never open your position at wrong time, which was in the middle of the trend in this case. Second thing is never close your position at wrong time due to fear as you did in this position. It was okay to close the position if you are confirmed that price is going to fall more and more. For this, you should analyze the position and who knows that stock might start rising from the next minute. There is one more problem with people that whenever they sit in front of the system, they can't stop themselves to do some trades. And this inducement leads them to heavy disasters. Generally, the situation is that we just close our position without taking maximum possible returns. When we have taken a huge risk, why do we get back with some small rewards? Minimum risk to reward ratio is 1:1. So, if you are taking a risk of $100, you should expect a minimum profit of $100 too. This is another huge problem with most of us face. Let's say you are getting a profit of $50. And if you remember the last case, we have taken a risk of $100. Now you are thinking that you will wait for this $50 profit to become a minimum of $100 because it is the minimum you should expect for taking that risk. Now, at this particular point of time, you are correct. You should rightly wait for the amount which you deserve for taking that risk. But the problem is that the things always don't go the way they should. Let's assume in the next minute this $50 profit become a $10 loss. Now, whenever you will do a trade, there is a great possibility that this loss will affect you and you will always withdraw from your position earlier. Now, just imagine this thing can also go in vice versa when that $50 become $200 profit. Let's assume that you are doing a new trade and new same $100 risk and same $100 profit you should be expected. Now let's say you are getting that $100 profit, but the problem this time is you will not be willing to close your position due to your last trade when you got $200 profit. Even if you are getting some indication that you can suffer loss, but you will not close your position and you will try to get same amount of profit which you got in the last trade. Only the people who have gained control over their fear and greed emotions can think rationally. Generally, it is seen that many traders trade to get inclined to do majority of trades as bull trades or bear trades. They become either bulls or bears and tend to stick to it, irrespective of the market conditions. If we want to succeed in trading in stock market, we can't stick to one kind of trade, as we have to change our outlook along with the changing trend and follow different strategies in different market conditions. Our trade should always be in the direction of the trend. In case of bull trend, instead of focusing on selling at high, we must focus more on buying at support after a positive trigger is achieved. This was all about the mistakes that we commonly make while trading. In the next module, we will learn about the trend concept.